All right, folks, we're going to go ahead and get started. My name is Michael Conway. I'm the State Insurance Commissioner. We're going to get through a couple of housekeeping items and then we will get into the meat and potatoes for the night. So, Jenna, I will turn it over to you.
Evening, everyone. Thanks so much for joining us. We're going to start with just a note from our interpreters who are we will have this meeting live translated into Spanish. So they're going to let you know how you can tune into that.
Hi, good evening, everybody. My name is Isao. I am with the Community Language Cooperative along with my colleague Diego Pons. I'm here to create a space for language justice where people can connect when they engage in the language of their hearts. We appreciate the efforts of the Department of Regulatory Agencies, particularly the Department of Insurance, for creating this space for everybody to be included. Today we will be using simultaneous interpretation. So when I'm finished saying this part in Spanish, we will turn on interpretation and you will see interpretation access through a globe icon or selecting the option with the three dots at the bottom of your screen on mobile devices. Even if the event is predominantly in one language, select the language of your preference to access English interpretation if questions or comments are made in a different language. And when selecting your language, you can also select the check the box mute original audio if you don't want to hear both languages at the same time. Hola, muy buenas noches a todos. Soy Isao. Estoy aquí acompañado por mi colega Diego Pons, por parte de la cooperativa del lenguaje comunitario. Estamos aquí para crear un espacio de justicia del lenguaje donde la gente se pueda conectar y relacionar con el lenguaje de su corazón. Agradecemos el esfuerzo el día de hoy del Departamento de las Agencias Regulatorias, particularmente el Departamento de Seguros, por crear este espacio. El día de hoy estaremos utilizando interpretación simultánea. Entonces, cuando terminemos este mensaje, vamos a hacer disponible el servicio de interpretación y usted verá las opciones en la parte baja de su pantalla, ya sea un icono circular del mundo o con los tres puntos para seleccionar el idioma de su preferencia. Cuando haga su selección, también puede seleccionar silenciar el audio original si es que no necesita escuchar ambos idiomas al mismo tiempo. Thank you very much. We can go ahead and get started.
Give us one sec, folks. We'll get the slides back up and running. While we're doing that, let me introduce the folks from the division that we've got with you tonight to Jenna Morton, who you just heard from, as well as our communications director. So she's going to be driving the slides and also kind of watching you all when we get to the Q&A portion to make sure that we're promoting folks to be able to chime in and ask questions. Then next we've got Kaylani Fleming, who is on our policy team, focusing on property and casualty issues, homeowners insurance issues for tonight's purpose. And we also then next have Bobby Baca, who is our Director of Consumer Services for Property and Casualty Insurance. So you all that have been to the Disaster Assistance Center, Bobby and her team were the prime ones that were staffing that throughout the last couple of weeks. And then we have Jason Lapham, who is our Deputy Commissioner for Property and Casualty Insurance. And finally, last but not least, our Chief Deputy Commissioner, Kate Harris, is on as well. So you're going to be hearing mostly from me tonight, folks, but you're going to hear from these folks too as we get into the Q&A portion, and Kate's going to handle a couple of the topics for the conversation as well. But Jenna, let me kick it back over to you to finish off the housekeeping pieces.
Thanks, Commissioner. And thanks again, everyone, for joining us this evening. A couple of housekeeping items for you. We will have a Q&A at the end of the presentation. We highly encourage you to raise your hand if you would like to ask a question, to unmute yourself, and then to turn on video if possible. And then we also have a Q&A where during the presentation, if you have any questions, you would like something clarified, you can type your question into the Q&A. So I am going to kick it back over to the Commissioner to begin the presentation.
Thanks, Jenna. And just to reiterate that point, folks, a key part of the reason why we are doing this town hall virtually and why you're probably going to see us do a number of town halls virtually is, in our experience after these types of tragedies, and I'm going to come back to that here in a second, it really is impactful for the insurers to hear directly from you. The insurers are on tonight too, most likely. I don't know for sure that we've got insurance companies on, but I bet dollars to donuts that they're here. And they're going to be listening. And if you raise issues, at least what we've experienced in past fires, is that the insurers tend to be very, very responsive to folks that raise concerns and issues with their claims process in particular. I know we're probably a little bit early for some of you in the claims process, so you may not know what issues you're going to run into, but that's why a key part of the reason why we do emphasize so much that we want people to jump on and actually chime in and tell us what's going on so we can hopefully help them and figure things out during these town halls. But like I said, it has had the impact that the insurance companies have been fairly responsive in the past. So on that point, though, on the fact that we are here because you all are experiencing a tragedy, where you're experiencing something that you never thought that you were going to go through. And we are incredibly sorry that you are going through it. These are the topics that we're going to cover tonight, but most importantly, I want you all to know that we're here for you. I can't promise you that we're going to be able to solve every problem that you're going to run into, but we're here to help. And you have our commitment to be here to help you as much as we possibly can, because I know this is unthinkable, right? I know that this is something that you, like I said, you never wanted to go through, obviously, but it's something that you never thought you were going to go through either. And it's incredibly challenging. And I know that so many of you are probably sick. If you're not sick of hearing this, you're going to get sick of people telling you that this isn't a sprint, it's a marathon. The recovery process in particular isn't a sprint, it's a marathon. That's true, folks. We got a long road ahead of us. We've got a long road ahead of us to get you back to the place where you were hopefully before the fire. But where it's going to take us all working together and take it one step at a time. And tonight is the first step on the insurance component that we're going to be able to share some information with you. And that's what tonight is really about. So we're going to go through the agenda items that you see here. But let's go to the next slide, Jenna. We're going to get you some basic information, but the core piece tonight is to really be able to answer your questions. So we're going to be with you as long as that takes. We'll be with you tonight. We'll give you all an opportunity to jump on, ask your questions. It very well may be the case that we won't be able to answer your questions, right? If you've got a really detailed question or if there's something specific to what's going on with you, you might hear myself or Bobby or Jason or Kate or Kaylani ask you to come in and file a complaint with us so we can actually dig into the details. But tonight is, like I said, that first step for us to be able to do as much as we can to help. So let's go to the next slide. So start with, I think, what will be some of the most challenging aspects of, it's always one of the most challenging aspects of any catastrophe if your home is uninsured or if you're underinsured. What's going to be incredibly pivotal, folks, for you all if you're uninsured and if you're underinsured too, is that federal disaster declaration that we don't have yet. And we can't promise you that we will be able to get it because obviously that's going to be dependent upon the federal government providing that federal disaster declaration. There is a lot of work that is happening behind the scenes right now. Your counties, because we have two counties obviously in play here, are going to be doing a lot of work to get data up and running to be able to support that federal disaster declaration. We're working with our counterparts and other agencies that are at the state level that are going to be really pivotal in trying to get that disaster declaration, getting data about what we think the uninsured population looks like up in your counties and the underinsured problem that we may run into in the counties as well as a result of this disaster. But where you can become, I think, vitally important in that conversation is to reach out to Representative Hurd. Reach out to him, make sure he knows he's your representative in Congress. Make sure he knows that it's going to be incredibly important that we get that disaster declaration. Reach out to the senators as well. They can be influential as well as Representative Hurd can. But really, it's going to be pivotal. It's always pivotal after disasters, and I'll talk about a couple of the ways that we've seen it be really important disaster declarations and what goes into those disaster declarations as we go tonight in a couple of spots. But the key piece is getting that declaration. So like I said, the part where you can really participate is to reach out to your representative, reach out to the senators' offices, make sure that they know how important it is to you all on the ground. So let's go to the next slide. So some of this is going to be relatively repetitive a little bit tonight, folks, but I want to make sure there's a couple of key points that I really want to make sure that we drive home. And some of this is what we've heard, complaints and issues people running into at the Disaster Assistance Center. So you're going to hear me hit a couple of those points a few times tonight. One of those is the copy of your policy. So for a very long time, it was a real pain in the backside to get insurance companies to provide copies of policies, just in general, but in particular after disasters like this. So a law was passed. Bobby, when was that law passed? Any idea? Ballpark?
Actually, I think that one was passed in 2013 or 14 after
So
the happening of those fires in 2012.
So what you're going to hear tonight, folks, a couple of times is that we learn lessons after every fire, and we try to pass laws that are responsive. This was a law that was passed, like Bobby said, back in 2013 after the 2014 after those fires, to just get people a copy of their policy, right? I don't have a copy of my policy in today's world. I would bet the vast majority of people don't have a printed copy of your policy. But even if you did, for those of you that lost your home, you would have lost that copy of your policy. So your insurance company, if you request it, has to get you your policy within 3 days. I know we heard from a number of folks at the Disaster Assistance Center. We've received some calls, I think, too, about issues with insurance companies telling you that you can't have a copy of your policy. We have gotten word out to the industry. I've made phone calls. The folks that are here with us tonight have made phone calls as well to remedy that. This isn't an excuse, folks. It's just a practical aspect of what happens. I think what we're seeing on the ground is that we've got people from these insurance companies that are part of catastrophe teams that have come into Colorado to be responsive that just aren't as up to speed with our laws here as maybe the people that are typically on the ground here in Colorado. So we're doing some reminders. But if you are running into those issues, if you're having problems getting your policy, I want to hear about it. We want to hear about it so that we can make sure that we're staying on top of it. Starting the claim process. Like the bullet point says there, folks, it's pretty self-explanatory. But start the claim process as soon as you have a loss. And that last piece is important, right? We want to make sure that you actually know that you have a loss before you start the claim process. Because if you don't have a loss, you don't necessarily want another claim on your file. But if you have a loss, get the claim process started so that we can move things forward as expeditiously as possible. So if your home is a total loss, this is another one of the laws that we passed after a fire. We passed this one after the Marshall Fire. So if your home is a total loss, the company has to offer you at least 65% of your contents coverage. And the reason, so the contents coverage, folks, that's the stuff in your house. All right, your refrigerator, your bed, your furniture, your clothes, all of those kind of your appliances, just in general. You have a specific, and we'll get to this a little bit later on in the conversation, but you have a specific coverage in your homeowner's insurance policy for your contents coverage. One of the issues, one of the biggest complaints that we would hear time after time after a catastrophe like you all are experiencing, after a wildfire catastrophe, is that some insurance companies made people go through just an incredible amount of detail in order to actually inventory their contents in order to get the payout for their contents coverage. And in many ways, folks, people felt like they were reliving the catastrophe, right? Because they had to remember and relive and kind of think about everything that they had lost over and over and over again in order to actually get the compensation that was due to them. So we passed this law, and we started with, after the Marshall Fire, just asking the insurance companies to step up and pay out. I think we actually asked them to pay out 60% of the contents coverage without an inventory. The majority of companies did that, very thankfully. And then we passed a law to require the 65%. You will have to fill out an inventory, almost certainly, if you want to collect the additional 35%. All right, what the remaining 35% of your inventory to justify that you're actually due that money. We'll get through that. We've got some tips as we go here tonight, so I'm going to revisit that piece a little bit too. But I want to make sure that sets in. So it's going to be a piece that, like I said, that we're a bit repetitive on tonight. Another piece that I'm going to repeat a few times tonight, folks, is that it is incredibly important for you to document as much as possible. Document everything, right? Document, keep your receipts for really kind of all of the food and your rent that you're paying for. If you're driving further than you would have normally in order to get to work, or when school gets back in, make sure you're documenting that, keeping receipts for your gas. Document, take pictures, take videos of everything. And I'm going to point out a few times as we go tonight, really when that is important and why it's important. But it's obviously from a high level important so that you can make sure that you have the ability to get reimbursed from your insurance company when you're filing those claims and working through the claim process. All right, let's go to the next slide. I told you we're going to be repetitive, so this is the first time. Like we talked about before, if you need a copy of your policy, the company's got 3 business days to get it to you once you request it. So don't be shy. Ask for your policy and let us know if you aren't getting it. Read it. Read the policy carefully. Understand what you've got in there. There's going to be different coverages that may be in play. You may have purchased additional coverages through your policy, through your insurance agent. So make sure that if you do have those extended coverages, you understand what they're for. Talk to your insurance agent. Talk to your insurance company if you have questions about your policy, but come to us too. Right. If you have questions about your policy, if there's things that don't make sense, and we'll provide our contact information here in a few minutes at the end of our presentation. But really, don't hesitate to reach out to us and ask questions, and ask questions tonight as we're going. Let's go to the next slide. So I'm going to do my best to avoid insurance jargon tonight, folks, because nobody likes insurance jargon. But there's a few pieces that it's going to be really important for you to understand and to know. So we're going to touch on a couple of those as we go. 2 of them are at the difference between actual cash value and replacement cost value. So those terms are not straightforward. But we're going to get through it together and we'll explain it. So actual cash value, what that means, and when I say the terms aren't exactly straightforward, what that fundamentally means, it is the amount of that it costs to replace whatever it is that you're replacing. Let's just keep it easy and say you're replacing a refrigerator, minus the depreciation of that refrigerator. So what does that mean in practical terms? It means that, right, like let's say my refrigerator at my house is 12 years old. We bought it 12 years ago. I don't remember what we paid for it, but we probably paid someplace around $1,200 or $1,500. If we lost that refrigerator today in a wildfire event, the insurance company would only reimburse me initially, most likely at actual cash value. So they would depreciate over that 12-year period of time what the depreciated value of that refrigerator. So maybe they would pay me out $300 initially. Then when I actually go and I replace the refrigerator, that's replacement cost value. That's when they make up the difference, folks. So they would make up the difference between what they had paid me out for the actual cash value, that $300, with whatever the cost is to replace that like refrigerator that I would be purchasing. So let's say it cost me $1,500, I would get the additional $1,200. Obviously, your deductible would come into play in those conversations, but that's the fundamental difference. That's what actual cash value and replacement cost value are. Those things are going to be really important for you to keep in mind as you're working through the claims process, because it'll get frustrating at first when the insurance companies, it may get frustrating at first. We've run into people that just generally get frustrated when they just get the ACV paid out initially. Just keep in mind that once you actually replace those items, you will get the RCV component. Let's go to the next slide, Jenna. And that's what we just talked about. So this slide is really going back over that again. So again, right when you initially get your payout from your insurance company, it most likely is going to be ACV for a lot of things. And then when you actually replace them, they'll make up the difference in the RCV component. So let's go to the next slide. So the parts of your policy that are going to be important for you to know and just be aware of. So coverage A, we've got them listed out here, but I'll go through them. Coverage A is for your house, right? It's for the actual structure. It's going to be the big dollar amount that you've got in your coverage. Coverage B is going to be incredibly important for a lot of you folks out there. It's the other structures. So your freestanding garage, outbuildings, a barn may be covered under your coverage B. A lot of you I know have lost other structures, had other structures on your property, and you lost them in the fires. So this piece is going to be incredibly important. It's going to be important for you to understand how that coverage B, the amount of coverage that you had in your policy, and just the general kind of structure that you've got in place. Coverage C is that personal property. So that's that 65% component that we talked about before. It's the inventory aspect, and it will become obviously very important in the recovery. Additional living expenses is your coverage D. We're going to talk a fair amount about additional living expenses here in a few minutes, so I'm going to leave that one for now. And then you may have additional coverages in your policy, right, through some kind of endorsement. If you had expensive jewelry, art, guns, tools, those types of things would typically be covered. If you have additional cover, to be in some kind of endorsement. Let's go to the next slide. So just some really high-level tips, folks, about the claims process. Like we talked about before, report your claim to your insurer as soon as you know you've got the loss. Get the claim number, obviously, and then the names of the contact information for your assigned adjuster and their manager. And then this last piece is really important, folks. And I know it doesn't seem it gets kind of lost as you're going through the recovery process, but it's incredibly important that you keep your insurance company up to date with your contact information. And they'll have your phone number, and obviously for the majority of you, your phone numbers won't change. Obviously, if you had a home phone and you lost your home, you need to let them know that your home phone won't work any longer, but your cell phone likely won't change. The piece that will change or may change is that you may be moving around, right, as you're for a variety of different reasons as the recovery process is happening. Make sure that you're keeping your insurance company up to date with your address, so that if they're mailing you documents, if they're mailing you checks, they know that it's going to the right place and they aren't getting lost. It's another kind of trip point rather, that we tend to hear from folks periodically, is when the insurance company ends up sending things to the wrong address simply because things weren't updated. Sometimes the insurance company fails to update things too. But one of the best things that you can do is to make sure that you're keeping your insurance company up to date on where you're living. Let's go to the next slide. Debris removal. Obviously debris removal is going to be a key part of the recovery process. It is a key part of every recovery process. And this is one of the places where I'm going to talk about the disaster declaration. So the disaster declaration after the Marshall Fire, I believe this was the first time, it was the first time in Colorado. I think it may have been the first time in the country that FEMA included as part of the disaster declaration that they would cover debris removal. So I know your county officials are working with the folks from Boulder County that were really pivotal in kind of getting those moving pieces put together. If that doesn't happen, and again, we can't promise you what FEMA is going to do with anything related to the disaster declaration, you likely have coverage through A, B, or C in your policy. Again, it's going to be important for you to try and read your policy and understand where you may have those coverages. If that doesn't make sense, you're getting through things and you need help, reach out to us, reach out to your insurance agent, and get some clarity on where you may have coverage for the debris removal in your policy. Let's go to the next slide. Okay, additional living expenses. We've heard a fair amount about additional living expenses in light of the mandatory evacuations that obviously went into place. And so many of you, for such a long period of time while you were evacuated, didn't know whether you had damage to your home, didn't know if you had lost your home, whether you had smoke damage, all of those kind of moving parts. But let's start with what ALE is, what it covers, and kind of then work through the issues that you're running into, at least to some degree, that we're hearing about related to this fire. So ALE, like the bullet says, ALE is coverage. It's for kind of those additional expenses that you're going to incur because of the fire. And be thoughtful about this, folks. So it's not just your rents, right? Like if you end up renting a home because you lost your home, it's not just going to be the additional cost of the fact that you're renting a home. It's also going to be things like the fact that you had to eat out for the last 2-3 weeks because you didn't have a kitchen, and those additional expenses as a result of that. It's also going to be things like that you may have to, like we talked about before, you may have to drive further to get to work or drive further to get your kids to school than you did at your home before you lost it. That will be covered by your additional living expenses as well. And the benefits are going to continue until you're able to return to your home. So the mandatory evacuation piece, it's not universal that it's covered in every policy. We did put out a bulletin. A bulletin, folks, is just kind of a fancy word of we put out a guidance document last week, really imploring the insurance companies to step up and directing the insurance companies to step up and provide coverage for ALE for the mandatory evacuations. We haven't finalized that bulletin. We're kind of going through the process of reviewing comments related to it. What I can tell you is that, and I don't want to overpromise to you folks, but what I can tell you is that after the Marshall Fire, when we made asks of the insurance companies effectively to be reasonable and step up and help communities recover, for the most part, they really did. So we're going to go through that process. As this recovery moves forward, we're going to ask the insurance companies to step up in a variety of different ways, and we're hopeful that they will follow suit and they will kind of respond like we did after the Marshall Fire. I can't promise you that that's going to happen. But keep going through the claims process with your ALE, even if you didn't have damage to your home and you have claims related to the mandatory evacuation, ALE claims related to the mandatory evacuation. Go through that process. Let us know if you're running into problems with it. Again, we want to hear about those things because, like we talked about before, folks, we learn lessons after every fire, after every catastrophe, and this may be a lesson that we have to learn after this fire, and it might be something that we look to future legislation to close a gap if we need to. So let's go to the next slide. So again, kind of going through the different components of things that ALE will cover. It covers rent for those temporary living arrangements. And folks, that includes if you're living with a family or friends for a period of time and you're paying rent to those folks too. So keep that in mind as well, right? If you move into a family's home and you're paying rent, or a friend's home and you're paying rent in order to help with the fact that you're costing them money by living there, you're using their energy, you're using their water. Make sure that you're keeping receipts for those components as too. The increased food costs that we talked about, the commuting aspect, and then pet and animal boarding is going to be covered as well. Let's move on to the next one. So I know a number of you, Airbnb provided waivers to folks. So a number of you may be in Airbnbs right now, and I think at this point, I believe I was told that they may have actually provided waivers for up to 30 days. But when you get to the point where if you do need to find someplace else to move, work with your insurance company. Like we say here, some do have services to help you find temporary and longer term housing options. But it's incredibly important that you remember that you don't have to use the company's vendor, right? If you find your own housing, the insurance company will cover that as well. And like we've talked about a few times tonight, folks, again, documentation is key in all of this, but especially when it comes to ALE. So make sure that you're keeping your receipts, make sure you're documenting things so that when you go and you file the claim, you have everything that you need. All right, let's go to the next slide. Personal property. So again, we're going to go back and repeat something that I said earlier, simply because it's incredibly important for you all, I think, to hear this piece. If you lost your home, the insurance company's got to pay you out 65% of that contents coverage. So for the majority of you, it's that coverage C on your deck page. So the deck page is the first. Is it the first page of the policy, Bobby, or is it? I always call it the first page, but I don't think it actually is.
It's usually the top page of the contract. So
right. So it's going to, folks, it's one I will say declaration page, but more importantly, it's the page that has kind of the summary of your coverages. So go on to that page and take a look at where your contents is. one piece that I should have touched on earlier tonight. The majority of what we're talking about tonight, folks, is for the admitted market. And I told you we're going to try and avoid insurance jargon as much as possible. But the admitted market is like the State Farms, the Allstates, the Farm Bureaus of the world, kind of the big insurance companies. If you purchased your insurance coverage through the surplus lines market, then a lot of what we're talking about very well may not actually apply to your policy. The laws that we have in place that we've been able to pass on the kind of back end of these disasters don't apply to the surplus lines market. Reach out to us. If you're confused about whether your policy if your insurance company is an admitted market or a surplus lines insurer, reach out to us. We can help you work through that. Talk to your insurance agent. They'll be able to help you to kind of think through that as well. This last point on the is incredibly important for you all to hear again. The payment for that 65% of coverage, it's not contingent upon an inventory. And again, we did that. We made that change in the law because of the pain and the frustration that people experience when they have to fill out those inventories. But if you go down the path, and I encourage you to get as much money out of your insurance claim as you possibly can that's actually due to you, go through the process of filling out the inventories. Let's go to the next slide, and we've got a couple of tips on what you can do. Before we get to the tips, it's the actual cash value piece is going to come into play. Once you get past that 65%, if you're getting to the additional 35% of your coverage, it will be paid out as ACV initially until you replace it. So again, just keep that in mind. Once you replace those items, you'll get that RCV component come back to you. And again, like we say here, documentation is incredibly important. Okay, next slide. So the tips. So many of your insurance companies really have figured out ways to streamline the inventory process and expedite the process. So talk to your insurance company, see if they have that. The other place to turn is United policyholders. United policyholders, they've got inventory forms and worksheets. Folks, you're going to be inundated with hearing from a variety of different organizations. People are probably going to be knocking on your doors telling you that they're there to help you. And I know it's going to be confusing and you're going to be unsure who you can trust and who you can't trust. What I can tell you is that you absolutely can trust United policyholders. They're at the Disaster Assistance Center. United Policyholders is a consumer advocacy organization. They've been up and running for a couple decades. Now we've worked with them really pretty closely after the last couple of disasters, Marshall Fire in particular. They have tools for the inventory. They're going to be a good resource for you kind of throughout the recovery process. And like I said, it is an entity that you can trust. And I know with everything that's going to be coming at you, it's really hard to know who you can trust and who you can't trust. So I wanted to make sure that we emphasize that for you tonight. They're going to have their own webinars. So United Policyholders really kind of has two arms or two parts to it at a high level. They do advocate for really kind of an improved insurance world generally, but then they help people. The second piece is they help people recover, and in particular, they have people that are volunteers that have been through disasters. Right, some of the folks that were at the Disaster Assistance Center are actually Marshall Fire survivors. So they've been through the disasters. They've been through this process. They know kind of what's coming your way, and they can help you kind of work through that process. So again. To repeat myself, I know there's going to be a lot coming at you. You can trust us. We're going to do everything that we can to help you, but you can also trust the folks at United Policyholders. When you have people coming and knocking on your door and just in general coming to you and telling you that you can help, a couple just rules of thumb that I tend to live by, folks. One, I try to keep it local, and I try to work with people that are from Colorado. Right, if you've got contractors that are coming to you, if you have lawyers, if you have adjusters that are coming in and telling you that they're there to help you, try and keep it local. Then check references. Make sure that you're checking references and get references from the people that are telling you that they're there to help. All right, let's go to the next slide. So once you get to the point of filling out the inventory, if you do get to that juncture, it's going to be important to try and think outside the box. So you've got videos. Everybody has social media these days. You probably have videos and pictures of your home up on social media. Your friends and family probably have photos and videos. Those can be really important or helpful, is probably a better way to say it, to help you remember everything that you had in your home, to help you fill out that inventory. And again, make sure that you are getting everything that is due to you. Credit card statements, Amazon purchase history, all of those kind of components can be helpful as you're going back and filling out the inventory and kind of rethinking things. All right, let's get to the next slide. So, as you get back to your homes, I know a lot of you have gotten back into your homes, the homes that are still standing. Many of you are still waiting for the ability to go home. It may be the case that you need to make emergency repairs to keep your home safe, right? You might have broken windows, who knows? It could be a variety of different things. As you're doing those things, whether you're making emergency repairs, whether you're deciding that you want to start cleaning, anything along those lines, like we've talked about before tonight related to other issues, documenting all of that is key, right? Take videos of the home as you get back into it. Take pictures of your home as you get back into it. Keep in mind that your policy is, as we say in this last bullet point, if you do have damage to the home, right? If you do have that broken window, especially with the rain that is coming our way, at least knock on wood, hopefully coming our way, your policy may require you to actually take steps to repair your home so there isn't further damage. But make sure you're documenting everything. Take pictures, take videos. Documentation is going to be key in all of this. All right, next slide. Again, as you're going back into your home, folks, not to be too repetitive, but documentation is incredibly important. There's likely going to be damage for some of you that isn't self-evident, right? You could have smoke, soot, and ash damage, heat damage, and you're going to work through the process, right, as you work through the filing a claim in order to deal with those types of damages as well. So again, documentation is key in all of that. Let's go to the next slide. All right, our Disaster Assistance Center. It's at the address that we've got down at the bottom there. We've been there all along. It has slowed down quite a bit at the DAC. It's our understanding, I don't know that they've decided necessarily where it will move, but it very well may need to move out of the Academy of the Arts for next week if it is continuing. So just make sure that you're keeping in contact with your county so you know where the Disaster Assistance Center is and you can get there to get help as you need it. There are resources, right, related to housing, employment, obviously insurance, and health and mental health. And I want to talk a few minutes about that. We don't have the resources in the slides tonight, but we'll get resources out to you all. BHA's got the Behavioral Health Authority has resources that they put together to help people on the mental health side of things. Folks, this recovery is, like we talked about at the beginning, this recovery is going to be a marathon. It is going to be difficult at times, folks, and it is going to be a mental health strain at times. Make sure that you're utilizing the resources that are out there and available to you, please. I know that this is going to be an incredibly difficult process, but there are resources there to help you get through it. And we'll get those out. What we found after disasters like this is we tend to be kind of a place where folks tend to look to for just general information. So we'll make sure that we're getting that out to you all as well. All right, let's go to the next slide. So the rebuild process, and a little bit of this we already talked about. But once you get to the rebuild process, and candidly, folks, we're months away from really getting to the point of the rebuild process. But when you get there, like I talked about, my kind of core rule of thumbs is I try to keep it local whenever I can. But whoever you're signing a contract with, make sure that they're familiar with insurance claims, but then also that you're checking their licensure, you're asking for references, you're confirming that they have insurance coverage in case something goes wrong in the rebuild. We don't regulate contractors, but we can help you kind of figuring out the contractor's insurer information and whether they do actually have coverage. So again, if you've got questions, come to us. This is probably a good point for me to pivot a little bit and talk about the rumor mill. So folks, one of the challenges that happens after every catastrophe is that the rumor mill takes off in a variety of different ways, and really just bad information gets out into communities. I want to urge you as much as possible to avoid listening to the rumor mill. Go to trusted sources, go to your county, come to us. Going back to those mental health challenges, some of the biggest mental health challenges that we've seen, that I've seen personally after disasters, is when the rumor mill takes off and just bad information and incorrect information gets into communities, and it can be devastating for folks in a variety of different ways. I'll give you an example. After the Marshall Fire happened, probably a month after the fire, a rumor took off that the rebuild cost for people in those communities was going to be north of $1,000 a square foot. It was when people started to listen to that rumor, it became devastating for people. It wasn't any place close to true. Right, the rebuild cost was much smaller than that as a price per square foot, but people heard it and they got incredibly scared. We did a lot of work to kind of dispel that rumor, but those are the types of things, folks, that really start to impact people in negative ways. So I know, right, in today's world, in the social media world that we all live in the AI world that we all live in, rumors can take off in a variety of different ways. Please try and avoid them as much as you can, and come to us, come to your trusted sources to get information that is actually accurate. All right, let's go to the next slide. Auto claims. So a number of you very well likely lost your vehicles in the fire as well. So file a claim with your auto insurance company. Unfortunately, if you only had liability insurance coverage, your insurance company most likely, almost certainly won't cover you. You need the comprehensive coverage in order for your insurance company to actually provide coverage if you did lose it in the fire. But again, this gets back, then we get into the disaster declaration all over again, folks. Again, it becomes another place where it becomes incredibly important for us to get that disaster declaration. So FEMA very well may have assistance to help you replace your vehicle if it's your only vehicle and you only had liability insurance coverage. So there very well may still be help coming, but again, that's why I'll urge you again to reach out to Representative Hurd's office and the senator's offices as well. Make sure that they're hearing from you that we need that disaster deck. All right, let's go to the next slide. Okay, I'm going to turn this over to Chief Deputy Kate Harris, and she's going to walk you through the health insurance issues, and then what else are you talking through, Kate? Flood, yes. All right, Kate, it's all yours.
Thanks, Commissioner. Good evening, everyone. So a few notes on health insurance. One is that we put out some guidance to the insurance companies that if you had any prior authorizations for medication refills or for durable medical equipment replacements that you are in need of, they should not make you go through that prior auth process again. They should be waiving that. And again, if you are having trouble with this, please reach out to our office. We are here to assist you. Your insurance carrier can also help you find an in-network provider if you're staying in a different location, or they can process an exception if you need one. Next thing is that we've opened a special enrollment period, and what that is kind of like an open enrollment period if you were impacted by the fire and you don't have health insurance coverage and you need it. The direction would be to go to Connect for Health Colorado and go to their website and/or call them and ask about the special enrollment period to enroll in health insurance. There also might be tax credit assistance available for you if you do qualify. Let's go to the next slide, Jenna. Okay, flood insurance. So this is really something we wanted to highlight because after fires, burn scars can really increase the flood and mud flow risk in your area, and that property policies generally don't cover flood. So I won't read through these resources, but we have a couple resources. One's the National Flood Insurance Program. You can also talk to your local broker or agent and ask about flood insurance. Just really something to be mindful of after a fire like this. I will turn it back to you, Commissioner.
Thanks, Kate. All right, folks, here's some general information. We'll get that we may have already done it, but we'll make sure that we list out our website. And we do have a web page already up and running specific to the 2026 fires. So it'll be a good resource for you to go and get information about. We'll have these slides up, we'll have the recording up. But then we'll also, as we're kind of putting notices out, putting those bulletins out that I talked about, putting up other consumer alerts, we'll make sure that we've got everything posted there for you all. And we're really kind of just the tip of the iceberg tonight about obviously all the different insurance issues that are going to come into play. There's going to be renters insurance issues that'll be in play, business interruption insurance components that for many of you. So we'll get information. Keep an eye on that page. That's where we'll be posting things as we get them put together, and kind of in large part recycling some of the stuff that we put out after the Marshall Fire as well. But here's our phone number. Here is our email address. For you to be able to go and, like I said before, call and request information, file complaints with us if you do get to the point where you need to file a complaint. You can also go on to our website, doi.colorado.gov, and there's a little button there that you can hit if you want to file a complaint right from the website too. So there's a variety of ways that you can find us, folks, and please do not hesitate to reach out. That is what we are here for. Okay, now we are going to get into like I said before, the meat and potatoes of the night, where we're answering your questions and we're hearing from you all directly. And I can't stress enough, folks, that I really do want to hear from you. I want to hear what you're going through. Like I said before, it really is helpful from the standpoint for the insurance companies to hear from you too, if you're running into problems with a claim already, or just in general, you've got questions, because they're listening, and if they're not on, they've got people that will be telling them about everything that they heard tonight, which is me. So folks, we are to the point where you are going to have to raise your hand, and I apologize that we've got to be kind of formal with this, but we've had, not us personally, but there's been a lot of Zoom bombing that has happened over the last couple of years, so we do have to have pretty tight controls on things to make sure that we are in control. So please, if you want to jump in and ask questions of us, please hit the raise hand icon down there at the bottom, and we will get into it.
Okay, so it looks like we see the hand raising in the order that they come in. So what'll happen is I'll say your name if a name is available next to you, and then I will click a button that's allowed to talk, and you will have to unmute yourself in order to ask your question. And we also ask, if you can, to please put yourself on camera so we can see you. So Scott McGill, I'm allowing you to talk.
Can you hear me now?
We can hear
Mr.
you.
McGill.
I don't have how do I get my photograph?
Don't worry about it, sir. You can just go ahead and jump in.
Okay. I live outside Steamboat and I've had no problem yet. And I think that I'm underinsured. I'm concerned about asking my company to raise the insurance level at this time because I'm afraid they'll cancel me. Do you have any advice in that regard?
So, Mr. McGill, I would reach out to your insurance agent and have that conversation about what they think, if they think that you're properly insured, if you need more coverage. They'll be able to provide you some thoughts about what's going on with your insurance company up there too. They won't be able to cancel you simply because you asked those questions. But if you run into issues and you run into challenges, and they're telling you that they may be thinking about that, again, reach out to us. But Bobby, Jason, Kate, any thoughts?
No, I would just say if there's currently a fire up there, they probably won't increase your coverage. But if you're just concerned about it because of everything else going on around the state, definitely have those conversations with your agent.
All right. Thank you very much.
Yeah.
Thank you. Okay, we're moving on to Marcy Velicente.
Hi. Hi, I'm Marcy Valseni, and I'm a realtor up in Steamboat Springs. And this morning in our office meeting, we heard that because we do have 2 active wildfires, and that if there's wildfires within 20 miles of a property that goes under contract, that insurance companies may be looking at stopping coverage in our area, or any area that is within 20 miles of a wildfire, and not providing new coverage to new people. And I just was wondering if you've heard anything about that or not.
I haven't heard anything specific about that. Bobby, have you?
No, I haven't.
Okay.
So, Marcy, if you can provide us with any information about kind of where that's coming from, I think it would be helpful. So you can shoot it off to that email that was on the slide. If we do get a federal disaster declaration in place, we do have a state law specifically kind of on point about non-renewals and refusals to write coverage simply because of a wildfire in a particular area. But similar to what Bobby talked about related to increasing coverage, the insurance companies, while the fire is burning, they're likely not, as a general rule, they're not going to write new policies for obvious reasons. The 20-mile piece, I'd like to get a little bit more kind of dig into that. That's obviously a pretty big area, so I want to dig into that a little bit. So if you can provide us any information related to where that's coming from, it would be helpful.
Okay, I'll try to, because where one of the fires is at is in the national forest, but 20 miles from Rabbit Ears covers a lot of area that's in the city of Steamboat Springs. So we're talking about several new, I mean, it would stop some real estate deals if that was the case.
Right. Yep. Okay. Going on to Mr. Gregory. Go ahead, Jenna. You
Yeah, I
can
was going to say Gregory Kolomitz.
Thank you. Thank you for doing this. Very informative. I'm a North Creek property owner in the Beulah Valley. What constitutes notification? Do you need an official letter? What constitutes notification of your property?
What do you notification of what, Mr. Kolomitz?
Loss of property.
You mean in order to file the claim?
Yes.
Bobby, thoughts on what exactly?
Do we
I
need
mean,
a letter? We've got some pictures, but we don't have a formal notification from the fire department or the sheriff. We don't have anything except pictures of our burned property.
So I would reach out to the company and let them know that once you are allowed back in, or the company adjuster is allowed to get in there, they will go in and they will inspect. But if you have photos showing that your property is no longer there, then that should that should allow you to start the claim process.
Thank you.
Okay. It looks like, Marcy, did you have another question that you wanted to ask? No, hands down. Okay. Moving on to Molly Crow. Molly, you should be able to speak.
Molly, we can't hear you if you're.
Sorry. Hi. I had you on a headset, and then for some reason it uh transferred me off of that. I actually have a couple of questions. So I've already filed a claim with the insurance. We were notified our home was lost on June 30th. Unfortunately, like, it wasn't our primary residence. And so we have a landlord policy, but we did spend a significant amount of time there. So the first question I had is, are there any state laws that are inclusive of non-owner occupied residences that could be potentially beneficial when filing a claim? For example, I think I was reading that an insurance company must give you a certain amount of time to rebuild, or the additional loss of use, which is 24 months for primary residence. But there is no way that I can rebuild that home in a year. And so we're going to have the option to either rebuild or replace. And then that brings me to my next question. On the replacement, how much control does an insurance company dictate what we replace the building with? Like if we buy someplace else, are we required to stick to the exact size, the exact bedrooms, bathrooms of the property that we lost, or can we add money to the table? And then the other question I had was actually specific to the to policies written. So when the fire started early in the morning of the 29th of June, the fire was 8 miles from us. And so I actually didn't think that the house was going to burn down because I even joked with my insurance agent. I said the whole town would have to burn down before it got to me, which is really awful because practically the whole town did. But I reviewed my coverages with them, and there were two things that were underinsured. One was the contents coverage and the additional structures. And my agent here in Denver actually upped those coverages, called underwriting, confirmed the policy was then binding. The policy was binding and changed prior to my home burning down. The home burned down, and now they're looking at it like, well, there was no moratorium, and there's nothing in the policy documents that talk about a timeline, but they're kind of questioning whether or not they'll cover it. How do I deal with that kind of stuff? So that's all my questions.
Gotcha. So that last one, Molly, that last piece, it's going to be the type of thing that I talked about earlier on, that it's probably going to be something that we, as you're working through the claims process, if you're running into issues, that you end up filing a complaint with us and we can kind of run those to ground. I think it's too hard to know exactly how to help you as we sit here today. On the first component, the additional living expenses. So what what Molly was talking about. So another one of the laws that we passed after the Marshall Fire. When the Marshall Fire happens, for people for your homeowners insurance coverage, a lot of folks only had 12 months of coverage of ALE in their policies. We actually, one of the things that we asked the companies to do, that the majority of stepped up and extended. If they only had 12 months, we asked them to extend it to a full 2 years. The majority of them did. And then even some of them extended it past that 2-year period. So on the heels of all of that, we passed a law that requires insurance companies in a wildfire declared disaster for your primary residence. If you have homeowners insurance coverage on your primary residence, they have to cover you 12 months of ALE, and then there's 2 6-month extensions that would be available to you. Molly, that law does not apply to your policy, unfortunately. So the ALE coverage that you've got in your policy is going to be what controls. Remind me what your second question was.
Well, are there anything in any of the state laws that have been passed, both in like 2013, I think, and 2022, that applies to non-owner occupied residences? Like for example, the option to do extended coverage past the 10% minimum. We only have a 10% extended coverage and ordinance law coverage. And we were never given any option. And it doesn't even say in our policy documents that we were given an option to extend that per some of the state laws. So I'm just trying to figure out like what applies to non-owner occupied residences and what like do not. And then how we deal with the on the replacement side, what they're allowed to dictate as well on the replace.
So, Bob, you want to jump in on the dictate piece?
Yeah. So the maximum you're going to get is going to be your coverage amount, right? So, and they're going to look at what the rebuild costs would be for the same footprint. So the same square footage, the same number of bathrooms, the same upgrades, whatever you have in the home. That's what they're going to be looking at. If you choose to go and buy someplace else, you're going to get the amount that they determine it would cost to rebuild, and then you can always put in extra money and buy a bigger home or a different home someplace else. But the most you're going to get is whatever the company determines your lost residence would cost.
Okay,
And then-
but does that mean that they can say, well, because I think one of my adjusters said, well, it has to be of like kind and quality. And I pointed out that my home was 106 years old, that I had completely renovated, and I'm not going to find something like that, and nor do I have time to rebuild right now. So I'm trying to figure out like how much leeway I have in figuring out where to put the total amount of the loss of use.
Those are really specific questions. I think I would, I mean, work with your adjuster, work with your agent in with some of those questions, but you are welcome to call our office and have more in-depth conversations about it.
Because both my agent and the 3 adjusters that I've been assigned seem to be totally clueless into the fact that they even wrote me a check and mailed it to the wrong address. Like a big check. And I had to tell them, like, I've never lived at that address. I don't know where you got that address.
Yeah.
That's concerning.
Yeah.
Call our office our office tomorrow.
Yeah, and Molly, to answer your question about the laws that were passed after Black Forest, after Marshall, those are applicable to the primary residents so they're not going to be applicable to non-owner occupied homes, unfortunately.
Okay. Perfect. Thank you, guys.
Thank you. All right. I think we are up to Eric Bakke.
Yep, Eric. Okay, Eric, you should be able to. Yep, I think you were speaking.
It might have been me.
Eric, you're unmuted. Okay, it sounds like we're having some technical difficulties with you, Eric, so I'm gonna keep you in our queue, but we'll move on to the next person. Lorraine Malgosa.
All right, Lorraine, we should be able to hear you. Lorraine, we're running into technical. Oh, maybe now we can.
Okay.
Sounds like we have some echo here, Lorraine.
I don't know. I don't have anything else going on. Let me turn my volume down. Did that help?
Seems like it helps a little bit at least. So go ahead and jump in.
Okay, so I'm not impacted by these fires, but you know, after the Eaton Palisades fire, homeowners couldn't rebuild a year to the date of the fire because State Farm was denying lowball. California did a market conduct examination. Out of 200 random claims, they found 398 violations. I know California has different laws than Colorado, but I've been experiencing this with my claims. And what are we going to do to see that these poor people don't experience the same delay, deny, and lowball?
Yeah, Lorraine. So can you put yourself on mute, Lorraine? There we go. We're getting a ton of feedback, a bunch of echoes. So Lorraine touched on something that many of you probably saw on the news over, I don't know, Jason, what was it, 4 or 5 months ago when the California market conduct exam, the information about that came out. So folks, what I can commit to you all, that we will make sure that we are keeping a very, very close eye on all of our insurance companies and making sure that they are being responsive and helping you all through this recovery process, because that's obviously exactly why you have insurance coverage in place to help you recover after a disaster. If we see problems, if we have concerns, we will take action to make sure that insurance companies are living up to the promises that they've made in order to make sure that your communities can recover, that the state can recover. I don't know whether those problems whether we will have problems and what exactly those problems may be, folks. So I can't tell you exactly what we're going to do until we find that we actually do have a problem and then we work to address it. but you absolutely have our commitment to make sure that, like I said, that the insurance companies are living up to the promises that they've made, because they are the vital component of recovering after a catastrophe like this. All right, should we give Eric another shot, maybe?
Yeah, Eric, I'm asking you to unmute.
Is that better?
There we
Yes, we
go.
can hear you.
Okay. Thank you for this. This is a terrific Zoom, especially for most of us who've never been through this, though we've experienced those down in this area. I guess my question, we were fortunate enough to our home is saved, but we did document everything for Airbnb. We had to do that right away because we had a pet, but we haven't had any success with 211 or Airbnb. We tried this morning. So we have our documentation on that, all our foodstuffs, etc. I guess where we're going with this, because of the way a lot of these insurances are set up, will most insurance companies, would they in the future raise your rates because of this request for reimbursement, or are we probably going to continue to have the same rates until the state decides to raise rates universally?
So it's a constant question that we're getting, mostly from the press, but obviously from other folks too, about what the impacts on rates will be because of the fires that are burning in the state. But Eric, let me correct one thing, Eric. We don't actually decide to raise rates for folks. That's the insurance companies request rate increases from us, and then we go through a process to make sure that they're justified. That I won't bore you with all of the details on. But what I can tell you, folks, it's natural, right? After disasters like this, we always get those types of questions from not only people that are impacted by the fire itself, but just around the state too. There becomes a growing concern that because we have a fire that is burning, or multiple fires that are burning, that we're going to see rates increase. What I can tell you emphatically, and this is probably going to be quite a surprise to some of you, the reason rates go up in Colorado is not because of wildfire; it is because of hail. So we the vast majority of claims in any given year, probably I would be willing to bet you even this year, even in the Marshall Fire year, the majority of claims are from hail, and the most costly catastrophes that we have every year are hail that hits the Front Range. So it's not hitting up in the mountains. So if we're going to see rates increase in the future because of anything that is happening this year, it will be because we have a bad hail year. I'm not overly concerned that the losses that we have from this fire are going to lead to, are these fires, I should say, as we sit here right now, and I'm knocking on wood as we sit here, that we don't have more losses. But I'm not overly concerned that we're going to see rates spike because of the insured losses that we have from these fires so far. Obviously, we got to continue to monitor things. I am praying for the monsoons to get here as fast as humanly possible. Like Kate talked about, please make sure that you are getting your flood insurance coverage placed in case those monsoons come, and we do have floods as related to the burn scars. But I'm not, like I said, I'm not overly concerned that we're going to see huge rate increases because of these fires. I am concerned on every year that we're going to see rate increases because of hail, but that's a different animal.
Thank you. You folks have been extremely proactive on this, and it helps all of us to understand a little more of the whole process. And to be quite honest, being a Colorado native, I'm well aware of the hail rather than the fire. So thanks very much. And if there's any other questions, I'll reach out through your lines and whatever. But you guys have been terrific on this information, and I greatly appreciate it.
Oh, thank you, sir. Yeah, and please, folks, keep in mind, you can ask questions about anything. We've got, we can answer questions. If you have questions about health insurance coverage or anything else, please jump in. All right.
Let's move on to Melissa Oquist.
Can you hear me? Yep,
Yep.
we got you, Melissa.
Okay, thank you. Okay, so my question comes from after submitting our claim, our insurance has already started issuing checks. And I think our concern is that standard practice for the insurance company to issue checks so quickly, because it makes us feel like maybe there's some deadlines or legal requirements that we may be missing. And that's why they're motivated to issue those payments so quickly. And then my second question is, when we get those checks, are there any specific rights or implications we need to be aware of if we deposit or accept those checks?
Yeah, Melissa, we can't give you legal advice. So if you're concerned about that second question, I would encourage you to reach out to an attorney and talk through those components. Unfortunately, like I said, we just can't give you legal advice. We're just the insurance folks. But from your first question, I think it's a good thing that they're paying you, that they're getting checks out the door. From my vantage point, the faster that insurance companies are getting money into survivors' hands, the better, because it helps you deal with the fact that whatever is happening, whatever your loss was, it helps you recover. But Bobby, Jason, Kehlani, any other thoughts? Kate? So I think that's the gist, Melissa. I actually think it's kind of good news that not kind of, I think it's good news, not just
Okay,
junk business.
thank you.
Yeah.
Okay, let's move on to Neil Chamberlain. Neil, you're unmuted. You should be able to speak.
Oh, good. Okay. I live up in a place called St. John up in Keystone, and 54 unit condominium, which on a yearly basis, I've been charged with trying to get insurance. We lost Farmers, and we picked up a group called Cincinnati Insurance, who has done a very nice job with us. But I have a fear each year that our wildfire numbers have not gone down. They're around 88 when we've done a very expansive with 3 properties, Keystone's Town Hall, and then Vale and the Conference Center here in Keystone. So we've done a fire mitigation program of over 30 acres and costing us close to $100,000. And unfortunately, the insurance group seems to continue to tag us with a number of 88, regardless of what we've done. And literally, we had one inspector or one inspection from, again, the insurance company that effectively gave us the insurance. When I was in touch with maybe 50 or 60 that my guess is didn't reply or respond because they saw that wildfire number. I called the DORA office and just asked, again, how do we get this number down? Because we've done all this work, and how do we get inspectors on our property to better analyze again what the fire risk is? I understand a group called CoreLogic is involved. I called them and got absolutely no response. So I'm just wondering if you have any background on that. And again, we're talking about 54 units, so it's quite a few people here.
Yeah, Neil. So the good news is we passed a law that I'm going to let Jason tell you about. I put him on the spot, and he didn't know I was putting him on the spot. So give him a second.
Sure.
I got under the gun here. Had to find the mute button. So Neil, what the commissioner's referencing is a statute that was passed last year that requires greater transparency into how companies account for mitigation as it relates to that wildfire risk score that you referenced, that 88. So there are certain types of disclosures that need to be provided to consumers at application as well as renewal, both disclosing the risk score itself and information around the model. In this case, it's CoreLogic around the model that the company is using, as well as the mitigation activities that will have an impact on that score. In addition to that, insurance companies have to post on their website in a public-facing manner those mitigation activities as well that can have an impact on that score. I'll just so I'll leave it at that. There's more details, but the point is that there is going to be greater transparency. This all will come online in October of this year. So we're on the cusp of seeing those notifications going out to folks. But as the commissioner mentioned, with other issues that have come up during this call, I would encourage you to reach out to us, and we can have a conversation with you in greater detail about your particular situation and the difficulty that you're getting in terms of the difficulty that you have getting this information. But it may be a little bit early in terms of what is required on the part of insurance companies to provide that kind of transparency and information to you.
The other piece that I would add in, just real quick.
Excuse me, would that mean in essence that, again, I have not read through the law, but would that require, again, let's just use the name travelers as a, for instance, to put boots on the ground, et cetera, to effectively see the work that we've done and maybe reanalyze what that number should look like?
I think that if there is, so there's also an appeals process or an ability for you to challenge what an insurance company has estimated or assessed in terms of the risk for the property or properties in question. So if there is some concern about the information the company is basing its decision on, there is also going to be an opportunity. Again, once this law is fully implemented later on this year, you will also have an ability to challenge the insurance company's decision. But and this is almost the case with almost any question that comes up. The details can really matter here, right? And it's going to be really important for you to reach out to us and have a more in-depth conversation. And so we can kind of dig into your specific circumstance, which will also allow us, if we need to reach out to the company directly to get information both to you as well as to us, so that we can determine what the company is doing and be sure it's appropriate and permissible under the law, and also provide you with some general guidance in terms of how to approach the situation once we get that information from the insurance company.
Yeah. So
I'm sorry, go ahead.
Yeah, let me just piggyback real quick off of everything that Jason just said. So I think, and actually inherently in your question too, one, Jason and I can probably geek out on this law for quite a long time, and that's why it's probably important for you to kind of reach out to us and we can have a separate conversation. So I'll just geek out for one more minute, and so we don't make everybody else listen to this. The inherently, right, in order for you to be able to actually appeal, like Jason just laid out for you, the other component that the law requires is we put requirements in place for the insurance companies to ensure that the models that they're using actually do account for mitigation that is happening. Now, that's a very broad statement that, to Jason's point, the details really matter. Not every mitigation is equal to other mitigation components. So there's a lot of moving parts here. But that law, we put that law in place in order to address the exact fundamental concerns and issues that you're talking about here, Neil. So once we're up and running fully in October, and we have a little bit more time, so we can get into the kind of weeds with you on what exactly is going on with your situation up there, I think we'll be able to help you out a little bit better.
Okay, if I can just again interject one thing, it's our fear that when you call 50 insurance companies and you get absolutely no reply, that they may be looking at that number and just obviously think, we're not going to insure anybody that's got an 88 on a wildfire number basis. So that's the thing we're worried about. You can't, how do we say, you can't project the work you've been doing if you get no response back. So it's just that it's a very difficult situation. Affordability, as you know, is huge. And that's part of it.
Yeah, so. I totally get it. And that's why, to where Jason started, that transparency component, we want you to know, right? We want you to know what mitigation is actually going to work. If you're going to spend the money, right, whether it's your condominium complex or it's the county or it's anybody else, we want you to know where you're going to get your bang for the buck. And again, that's why we passed this law. So reach out to us. The other component that we can help you with is kind of resources with brokers too that might be able to help kind of think through things as well.
Okay.
All right. Thank you, Mr. Chairman.
Thank you very much, guys.
Yeah.
Okay, we're gonna move on to Lisa Green. You're unmuted, Lisa.
Okay, can you hear me?
Yes.
Okay, my question is related to additional living expenses. Um, I evacuated the very first day of the fire, still under evacuation, so it's been over 2 weeks now. I'm told by the sheriff's department that my house survived the fire. So what I'm trying to wrap my head around, I don't know if I'm going to have smoke damage and any other types of damages that'll be high enough to make me file a claim. I'm almost in a position where it seems like my additional living expenses could potentially be more than my house damage. So you had a slide earlier that made it sound like additional living expenses are covered until I'm able to go back home. But it's my understanding from talking to my agent and reading my policy that in a case like mine where I don't have a total loss on the house, that the policy is only going to cover 2 weeks of additional living expenses. So can you give me some clarification around that?
Bobby, you want to jump in on that one?
Sure. So it's going to depend on your policy contract and the type of home. Are we talking about a homeowner policy, or what type of a residence do you live in?
Yes, it's a homeowner policy.
It's a homeowner policy. Okay. Yeah, it's going to depend on the policy contract. I am not aware of policies that limit the ALE to 14 days or to 2 weeks. But if you do have damage and you can't return home, then the company should pay until you can return home. So I would read through your policy, talk to your agent. If you have any questions, call our office, because we can help you kind of maybe understand the policy better and see what's going on with that.
Well, I do understand that if I can't return home because of damage to the house, that the policy will cover that and it would be beyond 2 weeks. I'm more in a situation, I live in the Rye area, which is still under evacuation, and they have no idea when we're going to be able to go back home. So, it could be 3 weeks, 4 weeks, 5 weeks, a point where my additional living expenses because of evacuation become very high.
Yep. Lisa, who's your insurer?
State Farm.
Okay. Yeah, I mean, so work through, like Bobby said, work through your agent, talk to the company, work through the claims process, assuming that you do ultimately decide to file a claim. But if you have questions either leading up to that or as the claims process is working its way through, reach out to us and we'll do everything we can to help. But I am fairly certain that the State Farm folks are on tonight, so they may reach out and kind of help you walk things through a little bit too.
Yeah, and they've told me that I would be covered, but it seems like from reading the policy, that's not the case. So that's where my confusion comes from.
Gotcha. Okay. Well, like I said, I'm guessing you may hear from them, but either way, once you get through actually kind of starting to work through the claim process, if you do ultimately file, reach out to us and we can help answer your questions.
Okay, thank you.
Thank you.
Okay, moving on to Brent Whitsitt.
Okay,
We
I
can
think
hear
I
you.
got it. Okay, this is I got several questions, but Colorado, I'm up in the Beulah area, and I had two homes up there and a workshop and everything, and it's a total loss for everything up on my place. But Colorado passed that 65% law that they have to pay within 3 days. Now, my insurer sure was State Farm too, like everybody else, and they offered me 65% of my main house, which is it was worth $877,000. 65% of a second house, which is worth $330,000, and they offered me 75% of my personal property, which that was $650,000, and I was talking to uh, he was the adjuster for State Farm. He's a contracted adjuster for State Farm. And he said I needed to be careful that State Farm might use that as a total payout. That's not possible, is that on that 65%?
So, Mr. Was it's going to be right? I don't know exactly what they told you and what they put in front of you, so it's a little bit difficult to answer the question. But we can, if you run into those types of issues, reach out to us. We can help walk you through them. But Bobby, what are your thoughts?
I mean, no, I don't, I guess I'm not really understanding why the company would issue 65% of the, are we talking the dwelling coverage or the actual house coverage is what they issued?
Yes, yeah, 65% of the, I had two homes, a workshop and personal property. And the total amount was, it was all insured for about $1.9 million. And, I mean, they are offering money within the 3 days, but this contracted adjuster that talked to me said that I ought to be real careful that they might consider that the total payout for the claims. And whereas that's nowhere near $1.9 million. You know what I'm saying now?
Yeah, I don't think that's correct. I mean, I would say that the company may be giving you money to start the process to, as far as the rebuilding process, but as you're rebuilding and as you start exceeding the money they've already given you, then they will issue supplemental payments to you.
Okay,
So yeah, you should have up to your policy limits.
that's
for
good.
coverage.
That's good to know. And another question was, and I already told you, the main house was insured for 800, I think 877, not 855. The second house, 330,000. Workshop was 87K. And the interior, which you got to itemize, 650K, which adds up to about $1.9 million. And I was told that just because I was insured for $1.9 million, which are the max, that I wasn't necessarily going to get that money. And then that behooves me because that's what I was paying for.
So that is possibly true. You have up to that amount for rebuilding, but if the rebuild costs, if the rebuild costs are only 1.8 million, that's what they're going to pay. They're not going to pay. They're not going to give you 1.9 just based on the policy limits. That you have to rebuild. You have to incur some of those costs before they will pay it. So. We're kind of getting into the weeds on this. I actually recommend you call our office and we can kind of walk you through this a little bit more if you want. But it is true that the company may not necessarily pay. They're not going to write a check for the policy limits. You have to actually incur some of those costs, all those costs.
Okay.
Yeah, Mr. Was but don't let yourself get too worked up about, kind of to Bobby's point. Don't let yourself get too worked up about that at this point, right? It's you very well may hit that policy limit once you get into the rebuilding and replacing everything. So don't worry about that too much at this point.
Okay. Now I'm trying not to rebuild in that area. I have huge mountains on my left, on my east side, huge mountains on my west side, and a huge mountain in the back. So it's nothing going to be a big floodplain. And I'm trying to buy a house is what I'm trying to do. I'm trying to buy a house with the funds that I get from this. And I was told from State Farm that I can do that. So I'm just trying to figure out how much money I'm going to get so I could go buy a house.
Go for it, Bobby.
That's a tough question. So we do have new laws in place that talk about purchasing a new home, a home in a different location, and the companies need to consider additional coverages like your law and ordinance coverage or your extended replacement cost coverage. So they do not have to pay you more than the cost to rebuild your property. based on all their estimates and everything, but they do have to include other coverages to get to that cost to rebuild. It's a really, really tough, complex thing to talk about. So, or to explain. But yeah, there are new laws in place that will help you with that.
Yeah,
Okay.
Mr. Whitsitt, so this was, I think this was at another one of the, did we pass that after the Marshall Fire, Bobby?
Yep.
Yeah, so it was another one of the laws that we passed after the Marshall Fire, that effectively, again, at a high level, and I'm oversimplifying this, and that's why Bobby said it's a really difficult issue to kind of answer in a general way. But at a very high level, what the law effectively does, it allows you to take your insurance payout and go and rebuild someplace else or purchase a new home. Now, where the difficulty comes into play of calculating exactly what that insurance payout would be, because to Bobby's point, and it gets into all of the components that we talked about earlier on in the presentation, Mr. Whitsitt, about ACV versus replacement cost value and calculating all of those. There's a lot of moving parts, is the easiest way for me to say it to you. So it really is going to require you to kind of start to work through the claims process. And if you're running into issues where you're not getting what you think that you're owed, reach out to us. We'll try and help you work through things, and try and get you the best information that we possibly can.
That's good. I appreciate that. Thank you very much.
Yes, sir.
Thank you. Okay, moving on to Carrie Babb.
Yes. Can you hear me? I posted in the chat earlier. So we lost mostly outbuildings, and there was a lot of personal property in those outbuildings. Does that 65% apply to that personal property that was in the outbuildings?
You didn't lose the primary residence?
No, there's possible damage, but we don't know because we haven't been allowed back yet.
Bobby, correct me if you think I'm wrong about this, but I believe the law is specific to losing the primary residence, Ms. Babb, but Bobby, I remember
It is,
that.
yeah. The 65% is specific to a total loss of the primary residence and all the contents inside of it.
Okay, so what about the personal property we lost in the outbuildings?
So you have coverage for that personal property, but you won't get the 65% upfront payment. You'll need to more than likely do an inventory of the items that were lost.
Okay, and then if we find out, once we can get up there and find out that there's possibly damage on the inside, then that could be a different scenario.
Yeah, so again, the 65% applies to a total loss, but if you have items in there that are damaged or lost, then again, include those in the inventory, and it's still all covered under your contents coverage.
Okay, I have another question. We have possibly, based on pictures, we possibly have some broken windows or melted windows that they will not allow us up there to like prevent further damage by boarding up those windows, putting plastic on the windows. How do we avoid that further damage if we can't get there?
Yeah, Ms. Babbitt, like as we had on one of the slides, it's obviously important for you to follow the guidance of the local authorities up there. So don't go back until they tell you it's safe. If you end up having further damage because of the fire damage, then that'll be part of the claim as well. But the other component, once you do get back up there, and you're starting to repair things and you are taking steps to make sure that there isn't further damage like we talked about, make sure that you're taking pictures and videos along the way so you've got all that documentation. But team, anything else you want to add on that piece?
And I had one other question. My husband had a motorcycle in one of the outbuildings. If insurance isn't going to cover that, which doesn't sound like they are going to, is that possibly a tax write-off?
That would be a question for your accountant, ma'am. Like I said about the legal side of things, we're just the insurance folks, so we can't answer questions related to taxes. But I'm sure you can find some folks that'll be able to answer that question for you.
Okay. All right. Thank you.
Thank you.
Thank you. Okay, moving on to Paul Hinman.
Okay. Hi.
Hi,
I
Paul.
just had one kind of quick question. We live in North Creek. We did mitigation through the Beulah fire. And about a month ago or more, our insurance company called or wrote us a letter and says, we've dropped your insurance, but you're covered up until September, which of course is good for us. My question is we're going to go through the process, but we now need to find new insurance. Can Dora help us at all find that insurance? Or also, can we go back on our original insurance company and kind of say, can you help us at all trying to keep our insurance?
Yeah. So, thank you, Mr. Enderman, for the question. One, I like your picture. So it's going to be an issue it's an issue that I flagged for the industry, actually, that we flagged for the industry earlier today, because it's not just you that was in the midst of kind of going through the non-renewal process. We do have a state law that once we get a federal disaster declaration that is very specific on a federal disaster declaration component, that the companies won't be able to non-renew up there for wildfire specifically. And there's, like everything else, it's not quite that simple, but that's the gist of it. But we're going to go through the process of looking to see, because it'll take a while for the disaster declaration to come through and for all that process to work its way out. So we're going to have some conversations with the industry. We'll work through whatever other legal mechanisms we have in place to stop non-renewals from happening. Because I'll be candid with you, Mr. Hammond, it's probably not going to be the case that anybody else, while these claims are working their way through, or it's not going to be easy for you to find other coverage. So give us a little bit of time. Keep an eye on the website that we put into the chat for information along those lines. But it is something that we're very aware of. We're already talking with the industry about that. We got to find a solution for those issues.
Okay.
So I don't have a great answer for you as we sit here right now, Mr. Hammond, but more to come, more than anything else.
Okay. Thank you very much.
Absolutely. And Mr. Hammond, reach out to us too. So we can at the very least, connect you with some other resources that are available out there too. Some brokers that might be able to help you.
Okay, perfect. Thank you.
All right.
Moving on to Luke Burlett.
Yes, thank you. Trying to figure out, I was told that getting familiar with WUI, Wildland Urban Interface, the new building codes regulating putting back into fire rated materials onto my product would be considered ordinance of law or code. But if an event took place before that code was made law, I was told that since the event took place prior to July 1st, which July 1st is typically when most building departments have WUI compliance, that insurance would not pay the ordinance of law to meet the WUI code standards.
Bobby, or team just in general. So the law and ordinance coverage, is it as of the events, as of the loss, or is it as of the rebuild?
I believe it's as of the date of loss.
Okay. So Mr. Burlett, reach out to us and we can help you kind of run to ground, and maybe reach out to the county, make sure that you're right about when the code changed, first and foremost, because it may be that it went into place before July 1st. And then
I'm told there might be some leadway if the county was talking about it prior to making it effective, then that's like a gray area, possibly.
So that falls into the category of rumor mill, sir, that I tend to try and avoid until we get definitive answers for things. But like I said, reach out to the county, see when it was that the code actually went into effect. Have a conversation with your insurer and your agent. See if they are actually going to provide the coverage in order to meet the code, and then talk with us too, and we'll see what we can do to help you if you're getting bad answers.
I'm told they're standing their ground on it, because it is on the effective date, not the event date. Excuse me. It was like she said earlier. Yeah.
Yeah, so I hear you that that's what you're told, but let's work through the claims process. Let's make sure that what you're being told is actually truly the case. Because like I talked about before, sir, the rumor mill is going to give folks bad information as we go. So let's take it one step at a time. Let's make sure that we know when the code was changed, and then we'll help you work through the claims process with the company as well.
Okay. I missed the beginning of this call. Am I able to find the recording so I can get like your information?
Yep. Yeah. So we're gonna have the recording posted and the slides posted to the webpage that we've got listed out there. But you can go on to just doi.colorado.gov, and right on the front page, we've got a link for the 2026 wildfires that you'll be able to find everything related to everything that we're going to be putting out over the next handful of months.
Thanks a lot, man. Appreciate it.
Yep.
Okay. Next is Wayne Verity. Wayne, you're unmuted. You should be able to speak.
Okay, is that better?
Yes, we can hear you.
Okay, thank you. My question is regarding the flood insurance. At 9,300 feet, I guess we never really considered flood insurance, but it was mentioned earlier, I guess, because of the burn scars, and went on to the floodsmart.gov, and it said that our community was not able to participate in the NFIP program. So I don't know if that's something we should be looking at, but it doesn't appear that it's applicable or that coverage is available anyway.
It says that the community, what does it say exactly, Mr. Verity?
This property's community may not be able to participate in the NFIP, National Flood Insurance Program.
What do you got, Bobby?
So each county pretty much registers with the NFIP that they are a participating county. So if your county has never done that and has not been participating, then you may not be able to purchase an NFIP policy. However, there are private flood companies and private flood policies out there. So I would look for an agent that might be able to or email us, because we may be able to provide you some resources on private on agencies that write private flood.
Okay, thank you.
Mm-hmm.
Okay, if there were any folks that put a question in the chat that we haven't gotten to yet that you'd like to raise your hand and ask it live, we welcome you to do that now. Okay, I see a few hands coming up. Let's start with Kathy Nenninger.
Hear me?
Yep, we can hear you, Kathy.
Okay, great. Thank you for this evening. By the way, this is really helpful. I fortunately am condolences to those who have had losses. Fortunately, I do not fall into that category at this time, but I have had 100% loss in past years with flood issues in another state. So I wanted to jump on here because I live on a 17,000 acre ranch. There are 470 homes, and we have our own mitigation teams that go out and help each other mitigate and so forth. My question is, unfortunately, about 3 years ago, and I'm the only one that I know of, and I've talked to a lot of the fellow ranchers here, State Farm canceled my insurance, my homeowners insurance, due to being in a high fire rating, location. Now, they knew exactly where I lived when I bought the insurance, and suddenly, just pulled the insurance. And I have been calling literally, for 3 years looking for coverage. The only coverage I was offered was the backup insurance that Colorado, kind of backstops. And that is 34 grand per year as opposed to the 3,500 per year I was paying. and that's even higher than my disability income. So I certainly can't participate in coverage at that rate. My question is simply, you know, how are insurance companies able to do this and kind of just, select isolated homes? And, also, it feels like an attack on loyal customers who have been with them for decades. So I'm just at a loss as to how to get insurance that I can afford. Are there
Yeah.
suggestions?
I hear you, Ms. Manager. I'm sorry you're dealing with all of those issues. So we don't have prohibitions on underwriting or really kind of constraints around changes in coverage by insurers because of their underwriting guidelines changing. And candidly, if we tried to pass things along those lines, I think we would potentially run into issues with insurance companies being willing to operate in the state. Now, that being said, we have constantly been talking about the fact that we have a huge affordability challenge, not only in this state, really throughout the western half of the country, but obviously we're primarily interested in fixing the affordability challenge in Colorado. We have passed legislation to help with those issues. It's going to take time for those really to kind of start to impact the state from an affordability standpoint. But there's going to be more that we need to do. We've been champions of trying to set up kind of high risk programs, reinsurance programs to help carry parts of the risk in our high wildfire areas of the state. Unfortunately, we haven't been able to get those pieces of legislation through. All of that being said, right, that doesn't help you. None of that helps you and your particular situation and the challenge that you've got going on. Reach out to us, ping us. We can at least connect you with other brokers that maybe can specialize in helping you deal with and work through the problems. I hear you said that you've called a number of companies yourself, but it very well may be the case that there are companies in, like, for example, the surplus lines market that I talked about earlier on that might be able to provide coverage that's more affordable than what you're able to get through the FAIR plan. So reach out to us, let us connect you with some resources, and we can see what we can do to help.
Thank you very much.
Yes, ma'am.
Okay, next is Doug Wesselschmidt. Sorry if I mispronounced that. All right, Doug, you're unmuted. Yeah, we can hear you.
Okay. Had two questions that I put in the chat. The first one is, well, first of all, we were a total loss in the first day of the Aspen Acres fire. We've got confirmation from the sheriff as well as other confirmation. But kind of quick. Uniquely, our insurance next premium payment is due on July the 24th. So we're trying to figure out if we're obligated to pay that amount in order to continue our insurance during the claim process. Yeah, I mean, we don't need coverage anymore because the house isn't there anymore. Now there still is the property that the land that we would own. So
Bobby, you want to
pretty guidance on that?
Yep, Bobby, why don't you tackle that one?
I'm sorry, just so I understand. So you're questioning whether you should keep your homeowner policy while. So I would check with your lender. You have a couple of things. You want to make sure you have liability coverage on the property, right, itself. So if anybody is injured or anything happens on the property, you have coverage. If you don't have a mortgage or the company's payment pays off the mortgage, there may be some policies available that will provide just that liability coverage. And then if you decide to rebuild, you can look at builder's risk type policies so that while your home is being constructed, it's under a builder's risk policy, or you keep your policy in place. It's really, it's something I would probably talk to the insurance agent or company about. And then again, like I said, if you have a lender or a mortgage, I would talk to them about what their needs are.
The other thing just to think through, Mr. Wesselschmidt, so I don't know exactly what is going on in from an availability standpoint in your neighborhood or where your home was. And I'm very sorry that you lost your home. But one of the one of the issues that I am just generally concerned about for that type of situation, right? Is if you do decide to walk away from your homeowner's insurance policy today, a number of companies are willing to continue to renew policies, but they're not writing new policies in some areas of the state. So it's to Bobby's point, it really is incredibly important for you to talk with your agent. And if your agents, if you're with an insurance company that only uses captive agents, so there are some insurance companies that only allow their agents to sell their insurance, reach out to us and we can connect you with other agents, other resources, so you can have a broader conversation to see what else is available. Because the last thing that I want is for you to let your policy lapse and you rebuild your home under a builder's policy only, and then you can't find coverage up there because you let this policy lapse. So there's a lot of different moving parts here, but step one, talk with your agent, see what they think, then reach out to us and we can kind of help you think through things.
Okay, thank you. And the second question was, got a letter from the insurance with some written paperwork following up, but they're stating that the period of restoration estimated to complete all the repairs, in our case, builders repairs, all the repairs in your estimate is 6/29 of 27. So basically, they're giving us 1 year of fire to rebuild a house.
We haven't even been on the property.
And yeah, we haven't even been allowed on the property yet. Who knows when we'll be able to do that? And then there's somebody who is questioning the quality of the wells within that area of Aspen Acres. And yeah, so I just don't see how that could be done in 1 year. I mean, even under ideal situations, I don't think that could be done.
They're not going to pay out everything until we incur additional costs.
Yeah, they said they're not going to pay out everything until we
Actually,
yeah.
Yep.
Because the policy says it's insured up to this certain level, and then we have 20% above that, but they're not going to pay the 20% until we actually incur that amount.
Yep, that's the ACV versus RCV issue that we talked through. So it sounds like that what they said to you, sir, is that that's what their estimate is, that it could be completed by that date. I would tend to agree with you that it is not very likely that it is going to be, your rebuild is going to be done by then. Bobby, thoughts?
I mean, I guess this was a primary home?
No.
Oh, no, okay. I apologize if I missed that before. So if it's a rental or
no.
Yeah.
It's a vacation home. It's not a rental.
But as far as our policy, it's not making any differentiation between whether it's a primary home or secondary home.
Okay, so 12 months, so you have 12 months additional living expenses on it or loss of use.
Under additional living expenses, they say that can go up to 24 months.
So I think we're actually confusing issues here. So what you're talking about, Mr. Wesselschmidt, was that their estimate is that you can complete your rebuild by July of next year. The ALE, right, is a separate issue.
Yeah.
So I think what is gonna, and this is not to continue the refrain that we've said a few times, but as you're working through the claims process, as you're running, if they are trying to stick to that July date, reach out to us and we can see what we can do to help.
Okay.
Well, we don't know that we can actually rebuild, so how are we going to finish this process with them to get our full payout if we cannot rebuild there? Because I am concerned about getting insurance on anything that we put back there.
Yeah, so that goes into kind of some of those components that we talked about before about your ability to use the your insurance payout. Again, there's going to be issues. I hear you. I heard what you said, ma'am, that it's a vacation home and it's not a rental home, but there are differences in the what the law requires versus a primary versus a secondary home. So the details with your claim are going to matter quite a bit. So that's why I keep saying that as you're working through the claim and as you're trying to make those decisions, talk with your agent, talk with the company, but then reach out to us. And we can, once you get into things, once you get into the details, we can help you kind of think through things and answer some of those questions when we can kind of see the complete picture.
Okay, thank you
very much.
Thank you. Okay, next is Daniela Gosalova.
Yeah, I live in a town of Granby in Grant County, and the town's board decided not to adopt the wildfire resiliency codes. So my question is, do you expect that there will be some consequences from the state that can have an impact on the insurance, or in the case there is the event of the fire? Because my house is in the area of the wildfire risk zone. Thank you.
Yeah, Ms. Goslow, we don't. So we're like I said, when we got the accounting question and the legal question, we're just the insurance folks. So we're not in charge of the WUI code. So I don't know whether there could be implications for the county. I'd have that conversation with the county, see what they tell you, what if they're concerned about those issues. But keep in mind, simply because the county has made a choice about whatever it is, right? Whatever their code may be in the county, whether it's meeting the WUI standard or anything else, individual property owners can, like we heard from the gentleman earlier outside or in Keystone, that they've spent a lot of money doing a lot of different mitigation. People, you're free to mitigate your property however you see fit. So I would encourage folks, in particular, once we start to get the information out that Jason touched on earlier, that's going to start to roll out from insurance companies this October about what they think will work from a mitigation standpoint. You're certainly free to step up and mitigate more than what you got today. All right, I think we are moving on to Ruthann Team, and I apologize if I mispronounce that.
Ruthann, we're asking you to unmute. That should come up at the top of your screen.
Can you hear me? Can you hear me now?
Yep, we can hear you.
Okay. So my question, I do not have insurance, but thank the Lord that my property was not damaged. But that is the problem I've ran into. I've only owned the property for 2 years, and no insurance company will insure me due to the fact that it is in the Pike San Isabel National Forest. So I want to know, I did get a hold of Allstate a couple days ago just for giggles, I guess, to see if they would insure me, since I got information from the county that my property was not destroyed. She said, yes, we can insure you, and went through the whole, coverage and all of this. And I'm like, great. And then she went to hit the push button to go to underwriting. And she said, oh, wait, you're in a moratorium. And I said, well, yeah, there's a fire in the area, but I was not affected. And she said, well, I said, can I still get the insurance? She goes, well, you'll have to wait until the 18th of July. And then we'll see if we can insure you at that time. Is there something that the insurance company knows that we don't, as far as like a disaster declaration coming down the line that you spoke of? And do they have the full authority to not give insurance at all, even though I've been trying for years?
So no, ma'am. So they don't know anything about the disaster declaration that that you don't know. That's just a general moratorium, like we touched on earlier, that most insurance companies are going to have in place while the fire is burning in the areas where the fire is burning. The 20-mile component that you heard the woman talk about earlier was that size was a little bit of a eyebrow raiser for me. So I want to dig a little bit into that. But as far as how long that moratorium may last from the insurer. So I would give them a call. I'd give Allstate a call on the 18th and see what they have to say.
But
On
my other question was, they don't know when the fire is going to be completely out.
That's
You
right.
know, they say it could burn all the way through winter. Um,
Yep. So that's where it's going to come into play. That's going to be really important. That disaster declaration that we talked about, it will kick in some state law protections that would come into play and would impact some of these issues that you're running into. But then separately, reach out to us separately, because I want to connect you with a couple of resources. One, I want everybody to, and I probably should have included this in the slides, but the Colorado Fair Plan, you all have heard that brought up a couple times. They're going to have moratoriums in place right now too, where the fire is burning. But that is the state's insurer. That's the insurer of last resort in Colorado. So we put
right.
that in place in 2023. So there'll be a potential resource for you. But also, ma'am, it's that surplus lines component that you've heard me touch on a little bit. You really got to get to the right brokers to be able to help you find coverage in those markets. We can
Right.
connect you
Well,
to those right brokers. So reach out to us and we can get you some information and some
right.
resources
And
that
for
might be.
one note, the fair plan, I mean, I think I kind of tried to reach out to them 2 years ago when I bought the property. But they at the time wanted, again, you want copies from these insurance companies that are denying us coverage in that area. But they are not giving it. They're just like, no, I'm sorry, I really don't have, a way to say that we can't insure you in that area. So I was unable to get proof in order to get the last chance insurance, due to the fact of the insurance companies not willing to disclose why they're not covering me insurance, giving me insurance.
So the three
Just
denials, yep, the three denials
right.
is that's in state law. That's a requirement for the fair plan to be able to write you coverage.
Correct.
But again, so folks, just in general, right? If you're running into those types of issues, whether
Mhm.
it's related to this fire or 5 years from now, and it's related to something completely different, call us. And I know, right, they call us, let us know, let us help you deal with those issues. Because Ms. Team, if we had known that 2 years ago, we would have helped you work through getting those three denials so you would have been able to get the fair plan coverage. So reach out, like I said, reach out to us separately. We'll get you some resources that will be able to hopefully connect you with insurers that very well may be willing to write your policy, not right now with the moratoriums in place, but once those moratoriums get lifted. And if you're continuing to run into issues with not being able to get those denials, we'll be able to help you work through that issue too.
Well, how long will they keep the moratorium in place from your your point of view? Do they wait until the fire's stopped completely and there's black line around everything, or what's the
Yeah.
regulation there?
So Bobby, we don't have any direct regulations on point, right?
No, we do not.
So we on how long they can keep the moratoriums in place, Miss Team. So it's gonna differ from company to company. There's not going to be a universal
Okay.
answer on that point. But again, not to keep repeating myself, that's where the brokers that kind of specialize up in your neck of the woods and maybe
Mhm.
specialize in the surplus lines market, they'll be able to help you navigate those components.
All right. Thank you.
Yes, absolutely.
Is there anyone else who either didn't have their question answered in Q&A or would like to ask a question live?
All right, folks. People are dropping off like flies, which tells me that you're probably sick of listening to me talk, which I completely understand. So, folks, thank you very much for being here tonight. And again, to repeat what we said at the beginning, we are incredibly sorry that you're going through this. We're going to be here to help as much as we can. We're a resource for you as you're working through the claims process. This won't be the last town hall that we have. We'll have more. There'll kind of be touch points as we get further into the recovery process where we do have more of these town halls. So keep an eye out for that, but don't wait for those either. Please reach out to us if you have questions because we are here to help. Again, thank you very much. And I'll close the folks that you have on here from the division. It's just a small subset of everybody that's been up at the Disaster Assistance Center nonstop nights and weekends. So a huge amount of thanks goes to the team as well. Some of them are probably, many of them are probably still on tonight. These folks that you see in front of you have all been at the Disaster Assistance Center, like I said, working nights and weekends, and I am incredibly thankful for all of their work. So I wanted you all to hear me say that as well. But thank you, folks. Appreciate you being here. Take care.